Good morning, happy Friday, and happy March to everybody out there. This is Steve Clemens, Vice President of Life Markets here at URL Insurance Group. Thank you for joining me this Friday morning. Those in the Northeast like me, I hope you're warm and braving the snow here in March. So I guess March wants to come in like a lion this year. But I'm very excited about today's topic. We have a great topic. I generally, when I'm talking about term life insurance, with agents that work with us, and especially on younger individuals, 45 and younger, looking for long-term income replacement needs, mortgage protection. I love going through this topic. Before I do get started here, though, I want to make everyone aware that we do have handouts for the meeting, like we do most of these meetings. And the handouts include, there's 4 attachments, so you can take these attachments at your leisure over the next 20 minutes or so. There is handouts on what we're speaking about today. So go into that toolbar. You can print those out and have those available or save them to your computer. So let's get into the topic. Simple tips with return of premium term on making larger sales with your middle market clients. Return of premium term does provide clients value, and it also provides you a larger sales opportunity. Now, I know return of premium term is not a new idea out there for most people. It's been around since about the early 2000s, and it kind of went away for a while. It was priced very, very low in the marketplace when it first came out, and then I think the market adjusted and priced it more accordingly to where it should be. We're really going to focus on one company today with their return of premium plan, which is Cincinnati Life Insurance Company, because I truly believe that Cincinnati Life on return of premium term has the best return of premium term in the marketplace today. We're also going to look at one sample client. So to review this policy or this return of premium term product, we're going to look at a 40-year-old male with a life insurance need of $500,000 for 30 years. This is basic family life insurance protection needs. This is mortgage protection, income replacement. Now, I opted for a 30-year term here. The return of premium term can be sold at 20 years, 25 years, or 30 years. So you have a 40-year-old, you can make the point that maybe they plan on retiring at age 65 and you want to run it for 25 years. The premium difference between a 20, 25, and 30-year term, there isn't much difference there. So whether you're selling a 20-year return of premium, a 25, or a 30, the premiums are all very similar. So in selling return of premium term, it is a product that you have to educate your clients on. And through that educational process, many clients are going to want to buy the policy. And one of the tools, which is in your handouts, that I find very helpful in presenting and selling return of premium term is this simple sheet. This is your understanding your life insurance options piece provided by Cincinnati Life. Now, again, this could be used for multiple different carriers. It's a great insurance 101 piece to use with a client, whether Cincinnati Life is the company of choice you sell for term, universal life, whole life, or return of premium term. This is a great one-page spreadsheet that you can review with your client, talking about what term life is, what return of premium term life is, what universal life is, and what whole life is. So obviously, on the left-hand side columns, we have the 2 term options right here, term, return of premium term, and on the right, we have permanent options. So when I go through with a client and I talk about term life, I talk about the value of term. Well, term, what is the value of term? It's low cost, right? You have a family, a 40-year-old with 2, 3 kids who has a mortgage, who has all the responsibilities. They need to load up on term life insurance and maybe also have some permanent insurance down the road. But premium dollars may be an issue with that. So we talk about the benefits of term. You can take a term for 10, 15, 20, 25, or 30 years. The premiums are guaranteed level. They're not going to change for that 10, 15, 20, 25, or 30-year period. the death benefit stays the same as well. So you have that locked-in guaranteed premium, that locked-in guaranteed death benefit. However, at the end of the term, that premium is going to drastically increase if you keep the policy. So really what you're buying is peace of mind coverage for a 10 through 30-year period. Peace of mind that you and your family are protected in case the worst happens. But you do have the convertibility option. We talk about convertibility and how if you convert before the end of the conversion period, depending on the company, it's different. With Cincinnati, it's before age 70 or end of the initial term. So in this case, the client would have the full 30 years at age 40 to convert to a permanent portfolio, universal life or whole life. And that's a great option for a client because if they are now uninsurable, they're coming at the end of their term period, now they have options. But you have no cash accumulation in the policy. So again, peace of mind. You quit paying your premiums, you lose your coverage, you have nothing to show for it. So return of premium term, you have a nice lower cost coverage, not as low as term, but you have some cash value in the policy. You have convertibility, and you can actually use your cash value that you build up on your return of premium term into a conversion, which helps lower that cost. They can take the money and run, like I like to say, take 100% of their premiums at the end of their policy, get a full refund. Or it also buys them a paid up policy, which we can show you how that works as well. And then we go down the line for universal life, how it's the next step up in premium, how it's a flexible premium adjustable life, the benefits of universal life with that flexibility, and then whole life. Guaranteed death benefit, guaranteed cash accumulation. So obviously, with all those guarantees, it's going to cost a little more for the same amount of coverage. So when we look at our 40-year-old preferred male at $500,000, let's look at a term rate. Let's see what it's going to cost us. So that's going to be, when we go on to URL's quote engine, the best rate out there is going to be $61 a month for a 30-year plan. That's a preferred risk, not a super preferred, but a preferred risk. We then compare that to return of premium term, we're a little more than double that price. Actually, that is a 30-year, excuse me, but that is a 30-year return of premium. Go to universal life. Now we're going up another step to $254 a month. And then with whole life, this is a non-participating whole life, which would be $474 a month. If we took it one step further to a participating whole life policy, we'd take another step up in premium. So when we show the clients the price and the value of each product, many times we find a client that we work with going right in the middle at return of premium. It's kind of a hybrid in cost, a middle ground between return of premium or between traditional term and guaranteed universal life, or the first step into permanent protection, and it gives a lot of value back. So let's look side by side at the differences at return of premium term and traditional term for this client. Term at $61 a month. They have a conversion, which is great, yes. No cash value, no paid up life insurance option, but they did essentially pay just shy of $22,000 over 30 years for peace of mind that their family is protected for what they needed. And there's zero return of premiums at the end of that period of time. So just shy of $22,000 for a good peace of mind over that period of time. Return of premium term, we're spending $144 a month now, a little bit more premium. You still have the conversion privilege. You have cash value accumulation that starts in year 6. You have a paid up life insurance option if the client decides to cancel the policy starting in year 7. If the client keeps the policy the full 30 years, it's going to be $51,796.80 refunded to this client. That's 100% of premiums and policy fee, fully refundable back to the client. Maybe they choose not to take the full refund and they choose a paid up life insurance option. In this case, it's going to provide them $91,000 of life insurance until age 99 without any more premiums paid into the policy. Or they can use the return of premium of $51,796.80, roll that into a conversion universal life or a whole life policy with Cincinnati. If that client wants that full $500,000 and still needs it at age 70, or maybe they need $250,000, maybe they need $150,000, but that's going to greatly reduce the amount of premiums they're going to have to pay in converting their coverage to permanent protection. As compared to the term on the left-hand side of this screen at $61 a month, they have zero cash value that they can use to roll in to that conversion on that traditional term plan. And lastly, if they want to take a refund of their premiums and have that paid up option, they can do that. They can do a combination of the two. So if they want to take some money back and apply the rest to a paid up policy, they can do that. So again, return of premium term is providing some tremendous options for your clients. Let's look at a quick slide of what the illustration looks like. When presenting return of premium term, it's always imperative to have the illustration there. A quote sheet just of numbers of what the client is going to pay for is not a good way to present return of premium term. Call URL, ask us for the full illustration if you're not doing it yourself. Joey Fry, myself, Matt Alina on the life team, we will get you this full illustration because this is the sheet you want to put in front of your client. So for this 40-year-old, as you can see, we have a 40-year-old preferred risk, $143.88 a month, and up at the top, always share with your client, this is guaranteed values. So this is guaranteed. Your premium will stay the same. It's not going to go up. Your death benefit is not going to go down. Your cash value percentage of what you're going to get back on your policy, this is the percentage each and every year guaranteed. As you can see on a 30-year term, it's guaranteed that your client will get 100% of the premiums back, which again is $51,796.80. It's also guaranteed at age 70 and 30 years, your client will have a paid up life insurance policy of $91,000. What if the client in a 30-year return of premium term decided to stop making premiums at age 65? Well, at that point, they would have 76.6% of their money back if they decided to get a full refund, which would be $33,063.62, or they'd walk away with a $67,000 paid up life insurance policy. So not too bad. So one of the arguments I generally get or we hear is, well, you know, that's a big difference in premium. I think I'll just take that money and invest the difference. Well, that's definitely a solution. But on the illustration, we have a way to maybe discuss or have a conversation on that argument. So if they're going to do that, an after-tax rate of return would have to be 3.84%. Obviously, you would need an even higher before-tax rate of return to equal that same amount of money. So obviously, they could, over a 30-year period of time, do better than 3.84% after tax, or a higher amount than that before tax, over 4% and change. So is that possible? Certainly it's possible over 30 years. Is it guaranteed? No. This is guaranteed. It's a nice way to maybe show your client that, yes, this isn't an investment type decision. You're getting a refund of your premiums, but that's the actual amount and percentage that you would have to earn after tax, guaranteed over a 30-year period. So what if what if you went with a cheap term and then at age 70 decided to have the same amount of life insurance as you would have on the paid up life option? So this is a guarantee to age 100. So it's a little apple and orange because the paid up policy will go to age 99. So we have a year difference here, but I think it's pretty relative to what we're trying to show everybody here. Assuming at age 70 the client's not in as good health as they were when they were 40, pretty safe assumption that at age 70 you may have had some health challenges. Let's say though, but fairly healthy 70-year-old, standard non-nicotine. No history of cancer or anything major, no diabetes, fairly healthy average 70-year-old. We're quoting the best standard rate in the market, which is Protective Life from the quote engine for an age 100 guarantee. So that would cost your client $330 and change a month. And that's a payment for, till age 100, guaranteed to 100, starting at age 70 when his traditional term would end. Let's look at no ROP. Your client's paid $61 a month for $500,000 for 30 years. Nice low cost term coverage. So they need a $91,000 policy at age 70, and they're going to pay $330.69 a month for that policy. Client passes away at age 88. They've paid $71,429.04 for the UL over those years. They paid just shy of $22,000 for the term. So in total, that client's paid $93,389.04 for their life insurance premiums, and their beneficiaries received $91,000. On the return of premium side, they paid a higher premium for the first 30 years, $144 monthly for $500,000. They elected to take the full paid up option. So now they have zero premiums after 30 years, a $91,000 death benefit to age 99. Client passes away at age 88. They paid $51,796.80 in premiums, and the beneficiaries received a $91,000 death benefit. So these are the things you have to, if you're presenting return to premium, it makes sense to review with your clients because it gives them that aha moment. Wow, this is a good deal in comparison to just buying the cheap peace of mind term. Now, not every client can afford it, or should I say, wants to afford a return of premium term, but the ones that maybe go through this process and understand it a little better see the value in a return of premium plan. So how to quote the Cincinnati return of premium term? 1, you can contact our sales support team at URL. 2, you can go on URL's quote engine and just get the numbers, get the idea, the rate, what it will be. We also have a system called Applicant, where on our website at URL, where you can quote the return of premium term and do an application, a simple, quick e-app on the process. So within 5 minutes, you can quote it and do an application with your client. They can be face-to-face with you. They can be over the phone. They can be, if you're licensed in multiple states, they can be in a completely different state. You can do it all in 5 minutes. No signatures required from your client. It's a really cool system. Number 4, to get the full illustrations, you need to use winflexweb.com. That's what we use at URL. We can show you how to use it if you want to use it yourself, or like I said from the get-go, call our sales support staff here at URL. Matt Alina primarily handles our final expense products, but he's well-versed in these. He's worked in these products for 15 years, so he knows what he's doing. He can certainly quote it, but your first line of support for quotes for return of premium term is Joey Fry. His email, his extension are there, as well as myself. So any one of us 3 here at URL, Matt, Joey, or myself, we will help you with those quotes. Now, if you use our quote engine, you would go to URL's website, and you would go under departments at the top, go to drop down to Life Markets, click on Life Markets. This is our Life Markets page. You have all of our extensions, and you can email us directly from the website. Click on Quoting Tools, and bear with me. Then you would click on Term Life or Guaranteed UL under the Quoting Tools option. Plug in your client's information. You can put date of birth or age, and that'll be actual age versus nearest birthday. It'll calculate that for you. One of the nice things with Cincinnati Life is they do not use nearest birthday, they use your actual age. So if your client is turning 41 in April or May or June or July or August, they're still 40 with Cincinnati Life, and a lot of companies are issue age 41. So you plug everything in here, 30-year, $500,000. If you wanted to show $500,000, 400 and 300,000, or $500,000, 600, 700,000, you can put 3 death benefits in. Choose the return of premium option. You can choose your health class, and again, in this case, I chose preferred, and I click Get Quotes, and all of our return of premium options come up. Now, as you can see, there's Cincinnati, Assurity, and Prudential. Cincinnati is generally going to be the most competitively priced in most of the age groups, rate classes. Occasionally, you will see Assurity with a more competitive premium. I like Assurity a lot. They're a great company that we work with, but there's a big difference with their return of premium plan. They do not return the $70 policy fee. So they're not returning that policy fee. So at the end of 30 years, that's $70 a year times 30 years is $2,100 your clients will not get in return. Assurity will also, they're not going to offer a paid up life option like Cincinnati will. So big differences. So when you see a difference in price point where Assurity is a better price point, it is good to explain to your clients the benefits of Assurity's return of premium term versus Cincinnati. Some clients may go for the more affordable Assurity in that case. Others may want the more value with the Cincinnati. Both are good options, but you have to know the differences in those. That's why I say it's always good to have the full illustration with return of premium so you can show your clients visually what that return is, what that value is. So the other option we have is applicant on our website. So same thing, you go to the Life Markets department, but instead of Quoting Tools, you're going to click on Online Applications. From here, you would choose the applicant option. When you get into applicant, you do have to create a username and password for applicant. Once you have that, it takes 2 minutes to do, you're in. Put in your state, date of birth, male, female, smoker, non-smoker, rate class, return of premium, $500,000. I chose Cincinnati. I click Quote, and it provides me the quote. So here's the quotes from Preferred Best, Preferred, Standard Plus, and Standard. As you can see, if the client qualified for a best rate, they're now at $120 a month instead of $144 a month. And then if they're Standard Plus, it goes from $144 to $190 and then $237 for Standard. From here, if the client wants to apply or you're ready to apply, you simply click Ticket. And then you start the application. As you can see, the application is only 4 slides. It takes 5 minutes or less to complete, and your application is submitted to Cincinnati that quickly. If you're going to use WinFlex, the website is www.winflexweb.com. It's a free software to use. You just have to, again, sign up to use it and have to be licensed with Cincinnati Life Insurance Company to be able to quote Cincinnati Life. So once you're appointed with Cincinnati, you can go into WinFlex, add them as a carrier. Now you can add multiple carriers to WinFlex. It's not just Cincinnati, but most of the companies we work with at URL. You plug in the client's information, policy options tab, put in the duration, mode, premium. As I mentioned, under reports, I always add the internal rate of return report. It's a great report to show your clients. Then it calculates the quote, you click on the illustration button, and you get the illustration for the client. One niche for Cincinnati Life Insurance is cigar pipe chewing tobacco equals non-smoker rate. So you can get as good as non-smoker plus, which is in between a preferred and a standard rate class. So any clients that you have that are more than a celebratory cigar smoker, I'm talking about a cigar smoker every day, not the ones that go out on the golf course once a month and smoke a cigar. Pipe smokers, chewing tobacco are all considered non-smokers with Cincinnati, and the rates are going to be phenomenal. Rewarding you for your business. We're very excited here at URL for our 2020 President's Club. It is coming up about a year from next week. We're taking our top 40 broker partners at URL to Charleston in a brand new 5-star luxury resort, Hotel Bennett, right in the heart of Charleston. Fantastic city, lots of great activities, historic tours, sightseeing. It is and has been ranked the number 1 city in the U.S. and number 1 ranked city for tourism destination by Travel and Leisure, and number 1 ranked food city in America by Condé Nast Traveler. So if you're a foodie, it is a great place to go, and we would love if you'd be one of our top 40 agents in 2019 to go on that 2020 trip with us. If you're new to URL, we have a quick start bonus. It starts at $25 per case, as long as the annualized premium is a minimum of $600, $100 per case if it's a minimum of $1,000 annualized premium, and a $250 per case bonus for cases that are $2,500 or above. A quick start bonus, agents who are eligible are new agents to URL for life markets, or agents who have not written a life market or a policy with life markets in the last 24 months. Bonuses paid for any of the business you write in your first 90 days at URL. We do have a final expense bonus splits going on right now. So anyone writing the final expense business, that's running through the end of March, end of this month. We also have a fresh start final expense bonus. So again, similar to our quick start bonus for term and UL business, we have a similar bonus here for our final expense markets. And our Gemini partner bonus. So if you are a Gemini partner with URL, or are interested in becoming a Gemini partner or interested in learning more about our Gemini partnership, we have quarterly bonuses by department for Gemini partners, and they're more lucrative in terms of what we pay out to our Gemini partners. And the reason that is because our Gemini partners are giving URL more of their business and giving URL a first look and giving us really the core of their business, which we truly appreciate. And because our Gemini partners are doing that, in return, we feel it's necessary to give our Gemini partners more perks and benefits and bonuses. And our Gemini partner quarterly bonuses are one of those things. So those bonuses are anywhere from $100 to $2,000 per case on life insurance and $50 and $100 on DI cases. If you have any questions on Gemini, please reach out to me. I'll be happy to talk to you more about the Gemini Partner Program. And if it is something you're interested in applying for, we can certainly get you that information. So again, when you have a life case, please reach out to Joey Fry, one of our sales support specialists here at URL for term, UL, whole life, LTC, DI quotes. Matt is our final expense manager. He would help you with your final expense business, and then myself as well, Steve Clemens. I'll be happy to help on any of those things that you have. I appreciate your time. At this time, I'm going to end the presentation, but I'm going to review any questions anybody has. And thanks again for those who are going to be signing off, and have a great weekend.